Hello everyone and welcome to today's morning report on Wednesday the 29th of June with me, Rich Pro Market Analyst at Handset Markets. What we have got today is another rebound and another bout of strength on the European markets as sentiment continues to recover really from this the Brexit decision. And risk appetite continues to sort of be dragged higher, and that is leading to sort of a move away from the US dollar. The US dollar coming just under a little bit of corrective pressure in the last sort of last day or so, really, following on from that sharp move higher. We're seeing just a slight retracement of that move. It'd be interesting to see if that turns into continued weakness or not, because I think ultimately this is probably going to be just a near-term improvement in risk sentiment, because I think that generally speaking, I think we're sort of set for further downside, and this could be a move that ultimately does get sold into again. But it'll be really interesting to see how this one pans out. But what we have got is just a slight unwinding of Treasury yields, 2-year slightly higher, 10-year not really showing too much positivity quite yet, but the big rebound is coming through in oil price. That's picking up on the WTI off that 45.83 low, which has been tested just a couple of days ago and held strongly, so that is a positive. But again, is this sort of a sustainable recovery is the real question. So we're seeing that move coming through in markets today. So equity markets higher. You're seeing the risk improvement. However, the flip side of that is that gold and the yen are also higher. So that is it's sort of a move that does question whether it is a sustainable risk rally. But it'll be, as I said, interesting to see how this one goes in the coming days. So, what have we got to look forward to today? Well, we've got German, basically inflation, really. You've got German inflation. Throughout the morning, the regions announced their inflation in Germany, but then if I get the chart going, sorry, that's the wrong one. Chart of German inflation. The German inflation readings at 1 o'clock, the final reading. The countrywide data is announced at 1 o'clock, and that's expected to come higher to 0.3%. So basically back to where we were a couple, sort of 3 months ago, back in March. And then at 1:30, we've got the the personal consumption expenditure for the US. Now, this is basically the Fed's preferred measure of inflation, and it's expected to tick slightly higher, with sort of 0.2% on the month, back to 1.7%, and that'd be interesting because that's back to where it was again a couple of months ago. So it'd be interesting to see if that does lend the dollar a bit of support, because obviously the dollar has come under a bit of pressure today, so it'd be interesting to see if that has an impact. And then later on we've got the EIA oil inventories report, and that's expected to have an inventories draw once again, and that would be 6 weeks in a row if that comes out at minus 2.5 million barrels, so that would also be supportive for the oil price. But clearly the market volatility remains in place. Sterling is a big gainer again today, up 65 ticks. But my chart of the day is the Kiwi dollar. Now, what we have seen, as I said, throughout the last sort of few days is these sort of large swings. Obviously the initial sell-off as the dollar strengthened, but Kiwi starting to find a bit of support. Now, the interesting fact is that support came bang on 69.60 area, and that's held 69.76, held a couple of days in a row, and this is sort of developing to the possibility of a head and shoulders top if you start to see the dollar strengthening again and pulling the dollar Kiwi lower. Sorry, the Kiwi dollar pulling the Kiwi dollar lower. That would put pressure on this possibility of a neckline, which is an old pivot as well. So this neckline support coming in at 69.60. If that does come under pressure again, and you look at the momentum indicators, you think that's possible, because the RSI has broken down below that 60 level that was the level that held in mid-June. The MACD lines have crossed lower. The stochastics are falling away. It would be interesting because as I said, it could turn into a head and shoulders top. But for now, this the support has come in place, and as I said, last couple of days it's held bang on 69.76. So that is clearly a level that the market is looking out for. But ultimately, this sharp move is just settling down, isn't it? It's not really showing too much buying pressure coming back in. I mean, it's sort of almost as though it's settling down on the hourly chart, and I think this resistance therefore at 71.57 becomes important. Now, prior to that, we've got around 71 figure is an old pivot as well, basically capping pretty much almost that reaction high. How far does it go back? A little bit. But then subsequently these look reaction lows, reaction high, and again again today seems to be acting as a pivot line again. So 71 figure is the initial resistance, and that is holding the little rally that we've got in process, and that's holding that back. But 71.57 is this reaction high that we saw on the day of the Brexit, that rebound high. So if that stays intact as a lower high, then the resistance could mean that we start to build this sort of head and shoulders top pattern. But again, it's still in process. It's not certainly by any means going to definitely happen. But the momentum indicators on the daily chart certainly seem to suggest that there is a deterioration in this momentum, and it could well be seen. Now, if you see a breakdown of 69.67. Sorry, 69.60. If you see a breakdown of that neckline, then the next support to come into play is 68.80, which is an old breakout level. So 68.80. But then beyond that, you're looking at sort of the level that sort of came in as a bit of a pivot area around sort of 68.80, 68.20, 68.50 area as a pivot. But for now, obviously we've had this rebound, and it needs to continue. It needs to move above 71 figure. It needs to move above 71.57, which is that reaction high, or intraday reaction high on the Brexit day. But for now, it's still at a bit of a crossroads, I think, on the Kiwi, and it'll be interesting to see if it can continue the rally, because it has now unwound, and as I said, the bulls are sort of at a crossroads. So I wish you good luck in your trading on the Kiwi dollar today, and I'll speak to you later. Thank you.